All right, here we go. So let's take a look to see what happened in the markets today. And today is Thursday, March 18th, and we're trying to do this in 5 minutes or less. Well, today the NASDAQ got hammered and dropped more than 3%. Let's take a look at the indices, and we are starting with the Dow as always. So the Dow held up pretty good, still hovering around session highs and record highs. Let me change this to a red color because I like it better. And red is very appropriate for today. So the Dow lost 0.5% today. S&P did even worse. So the S&P 500, as you can see here, not doing too well. We are having the dip today, down 1.5%. But the real loser today was the NASDAQ. The NASDAQ got hammered again, plummeting 3.1%. As you can see, the NASDAQ just can't catch a break. So what the heck happened today in the market? And to be honest, nothing really. And right now it's all about the yield. And the yield is a fancy word for longer term interest rates. You see, yesterday the markets were happy about Fed Chairman Powell's remarks because he reiterated that the Fed will not raise interest rates until they see inflation push above its 2% target and a significant improvement in the labor market. But Powell did not push back against a rise in long-term interest rates. And we are right now seeing the 10-year Treasury notes rising significantly over the past 6 weeks. So this here are the 10-year bonds. And when the 10-year bonds go down, this means that the yield, the so-called yield, is going up. And you see, I actually have a chart for you that shows you the yield. Here we go. So as you can see, the yield has been moving higher, higher, higher. And if we zoom out a little bit here, because then you'll see how dramatic it is. So the yield actually has pushed to its highest level in 14 months. Look at this. And this means higher interest rates. Now, why is this important? Why do the markets care about higher interest rates? Well, higher interest rates mean two things. Number one, it's getting more expensive for companies to borrow money. And if it is getting more expensive, it means that it will decrease their profits. Number two, it is getting more attractive for people to put their money into interest-bearing savings account instead of the more risky stock market. And that's why the stock market is tanking, and it is hitting tech stocks the hardest. Let's take a look at some individual stocks, and we are looking at the FinWiz map here. So as you can see, again, we can draw a line, and this is where we see tech and growth stocks in the upper left right here, while we see more of the value stocks down here. And as you can see, both Apple and Amazon finished 3.4% lower. And it seems that it makes sense right now to switch back to blue so that you can see Apple and Amazon. Netflix, where do I have Netflix? Right here, lost 3.8%, and Tesla moved 7% lower. So what's next? Where do we go from here? Let's just go back to the indices to see what is happening here in the Dow, in the S&P, and in the other indices. Well, you see there's absolutely nothing on the economic calendar for the rest of the week. So pretty much today we had Fed Chair Powell speaking again, but he reiterated basically what he said yesterday. And as you can see, for tomorrow, for Friday, March 19th, there's nothing on the calendar. So this means that traders will stay focused on the yield. And this means that most likely we will see a continuation of the rotation. So the S&P and Dow will probably make new record highs while the NASDAQ keeps struggling. Anyhow, this wraps up today's stock market news in 5 minutes or less, and it only took us 4.5 minutes. Pretty good. Keep in mind, trade what you see and not what you think, and I will see you in the next video. Have a great rest of your day.